Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. Well, we take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves one simple question: what happened today? And what does it tell us about the coming ones? I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. You can get it there. Play it anywhere, any device, anytime. Register there. And I say this every now and then, but if you want to push it to a friend, do a retweet or whatever it is. I appreciate it. Spreading the word, through you folks is the way this show grows, and the content I can provide grows as well. So I thank you in advance and ask you to do that when you have a chance. If you want to ask me questions, pop over to the site, click here on NeoTA TV. There's, this gets you to where you're at now, but you've got the ideal situation here. You can text or you can email questions, and I'll certainly try to pick them up. We have one tonight. We'll be dealing with it once we get to it, but let's start with the market. And what do we have? We have another day of down. That is 5 days of down. We haven't seen that in a very long time. I would venture to guess it's been at least a year, probably more. I can't remember it for at least a year. All of 2014 was straight up, basically, with a day or two here and there. And certainly 2013 was that way too. So maybe it was 2012. I know it's been a long time. We had another day of down 130. Dow was the least down, then the S&Ps, then you had the real hit put on the Russell. We're going to talk about the Russell a little bit later. Actually, the viewer question is about the Russell and the IWM, so we'll get to that. And then the composite NASDAQ index still getting hit. Gold, another nice pop-up, $13 today, up another percent. Silver, 2% higher. We had the bonds skyrocketing again. Again, as I said last night, this is starting to look like some sort of a blow-off. We'll talk about the yield curve and what was happening there. And the dollar was up again, although it tested and failed today, which is another piece of information we have to consider. So let's pop in here, take a look at what's happening with these markets. And let's start with the S&P 500. Well, actually, let's start with the culprit again, oil. I've talked about oil multiple times, and what we keep seeing is a press lower and lower and lower, and it's day after day, it seems. All oil has been able to do so far is find little ledges where it could sit before it breaks down lower and lower, right? Here's another ledge, one more time, and now here we go again. We had big spikes in volume down here as it was trying to test the lows. It got underneath them right at the end of the year, and now it's just starting to give it up again, and you're seeing the volume start to expand again. I suspect oil is once more going to make another ledge down here somewhere and try to hold. Now, that volume increase is actually a good sign because you're blowing out the lows. You're blowing out whatever longs there are or whoever's trying to speculate on the long side, and that hastens a bottom in this market. Now, if you look at the oil stocks, they're coming into these lows, the volumes aren't there. If you look at and that's the integrated oils. If you look at the OIH, you've coming down towards the bottoms again. You don't quite have the volume. There's another one we could look at, XOP, which is a little different mix. Also, volume's not there. So all stocks don't want to give it up, and they're doing that while oil is going down again, suggesting that we are going to see some sort of bottom here again in this oil price, and more than likely these oil stocks are going to bounce again, just like they did this last time. So that's one piece of thing. But let's go back to the S&P 500, which is where we were heading. S&P comes in, the Fed bar was the 17th. It comes into the Fed bar, and now it's testing into the Fed bar. it's already given up, the swing point high a long time ago. It's way down here, and it's got these lows as a target. Now volume increasing on the way down, and I suspect if we get another day or two down, we're going to see it increase more. But right now, it doesn't have the volume, and this is the one that has the most volume on the way back. If we look at some of the others, Dow Jones even had lighter volume than yesterday, and it held the Fed bar. So a little bit of a divergence there. If we look at the NASDAQ's coming back. It also doesn't have the volume, and it's almost at the lows. And if we look at the index came back to test the lows, just missed it. Volume lighter on that test. So when I look at all of those, what's the theme? Well, the theme is that as we're getting lower and lower in price, coming back to those December lows, we are not seeing the same amount of sellers. We're not seeing sellers pick up. They're not declining, but they're not picking up at the same pace that we saw them before. Now, if we were to just blow this out, I'm sure there's going to be some stops down here, but I suspect a lot of stops have already triggered on this way back, because I don't think most people expected this kind of a start to the year. Russell comes back in. Now remember, Russell we talked about last night, and I said, okay, if you're bullish, you want to see it hold this area. Well, yesterday it got just up underneath it, and the real question was, would it hold or not today? Well, not even close. Blows it away. It's back into the highs of the lows, which is I think that's on the day before the Fed bar. Yeah, the day before the Fed bar. So it's into the highs of the lows. Also doesn't have the volume. The fact that it's down here, though, does what? In the neoclassical thought process, anytime you can't hold a swing point high, that typically puts you back into some sort of a range trade. Where's the range trade? Well, certainly it looks like it's here at least. The real question is will it be lower? We don't know that yet. But what we do know is more than likely we're in some sort of a range trade. So that's one of the viewer questions. That's what that question, that's what the answer looks like to that question which was asked. And specifically, let me make sure I answer all the questions. So the question was, I saw the Russell did a retest regen on swing point high but failed to regen higher. It's failed 2 days now, and that's what we just saw. It's back into that support zone, and it bounced. What does it mean, right, from a neoclassical perspective? Well, it means what I just said. It's range trade, right? You got a range trade now. IWM doing the same thing. Also doesn't quite have the same volume on the way back, but it's the same concept. It's a range trade. You break it down, you're range trading. Now what I want to bring to your attention, I'm going to go back to the S&Ps. So many times we've seen these sell-offs, and I don't know if this time it'd be different or not. And there's still one hanging over here. You see a volume spike right back the other way. Doesn't want to quit once it gets going. Right here again, this one was even more vertical. Same sort of idea, right? Goes back straight back up. Are we going to see another one of these V-shaped moves? I mean, we've seen these over and over and over. Well, I don't know the answer to that. But what I do know is that more than likely we've got some sort of a range trade setting up, or at least it should be a range trade. Now, historically, this has been the trade. In other words, you expect it to come back up, and you expect it to fail at some critical point. And on these charts, the critical point is right here on the way back up. Now that it's gotten underneath this, you actually have another place it has to get back over, but that one won't be as hard right now unless this thing just keeps going down, right? And then the bounce up would have difficulty at the lower price point. But right now, the spot up here is the spot. So if this thing begins to bounce and it fades or fails in this area, right, then that would be typically what happens historically. But typically is not what we have seen with this market for so long that I suspect most people don't expect that to happen anymore. And once you get most people on the same side of the boat, then somebody tips the boat over. So we'll see what happens when this thing bounces, because the failed bounce is really where you can get hurt. And if this thing comes back and fails, then potentially we're going to get a break of this low, and then we'll get something more sinister to the downside. But right now, you have to expect the range trade is up in here somewhere. And given what I was just talking about with the volumes, you might suspect that it's going to happen tomorrow. As a matter of fact, before the end of the day, I was telling subscribers in the TNT room today that that's kind of what I expect. We played that rally, the squeeze rally at the end of the day, took some profits on the way up, and then it came back down at the end of the day. But I suspect that's what's trying to set up here, is some sort of a bounce, and we'll just have to see how it plays out. Now, it's not just the indexes that are suggesting that, it's also elsewhere. For example, if we go to the major sectors and we look at these, last night we were talking about the ITB, ITB, the IBB, right? The broker, the biotechs and the housing markets are still holding up, and that still looks the same. Neither one of these gave it up big. But what I want to point out is those stocks that are coming back, right? The sectors that are coming back. Take an example here. Here's the XLY, right? Consumer discretionary. As it comes back, is the volume picking up? Not really. Is it higher than what it's coming into? No, not really. If I look at the XLV, same sort of scenario, right? Look at your lows. Look at how you're coming back into them in terms of what kind of volume you're pushing. And you can just go right down the list here. Here's the XLP. Now this one is actually a little bit higher. That one's a little bit more debatable. Here's your XLK, almost at those lows. Doesn't have the volume. And I can just keep coming after one after another here. Some of them are higher volume, some aren't. This one's going after the lows, but still doesn't have the same amount of volume. It doesn't mean it can't break it. It doesn't, I mean, you can break on lighter volume on the way down just as you break on lighter volume on the way up. But folks, you've already pushed back, straight down 5 days, stretched it pretty good here on a short-term time frame, and you're not seeing the volume pick up, the escalation. You're not seeing willingly more and more buyers, more and more sellers showing up at lower and lower prices. That's the whole concept behind tape reading neoclassical, right? You want to see how they behave at critical points. They're coming in a critical point, and we're not seeing the evidence that they're willing to sell at lower and lower prices. Can it change? Sure. If it does, it's a definite red flag. But if it doesn't, what does it mean? Well, it means you could get one of those V-shaped reversals. And I don't want to harp on those too much because personally, they're a pain in the rear because they're very hard to trade. Once you go straight back up, it's pretty hard to get any kind of position on. And so we'll see how that plays out. But as I'm saying, the evidence suggests that more than likely tomorrow these things are going to try to spike back the other way. If you want a little more evidence of that, then I would suggest you come over and look at a few more stocks and sectors and indexes. Here's the EEM, same thing, coming back, doesn't have the volume. FM, same thing, coming back. And then we go to the yield curve. I want to start with the long end of it, the bonds, the TLT, right? Here was that spike high on big volume. This was the day they basically shut off the computers for the bond traders, they did. Because things were just totally stupid that day and they didn't know what the heck was going on. What are you doing now? Well, you got another one of these crazy spikes, starting to take place. You don't have quite the volumes that you saw back there, but certainly a big spike. These yields, if we come over here and pull the monthly over on this, they're almost back to where they were at the very highest levels in the summer of 2012. That's 132.21. We're trading at 131.65. Does it look like it's going to spike that high? Certainly looks like it wants to try. What's it going to do when it doesn't? I suspect it's going to come right back down. But that's the way the bonds are shaping up right now. And I wouldn't put as much emphasis on this if it wasn't across the entire yield curve. So if I go to the 7 and 10 year bonds, for example, Same sort of spike taking place. They're coming up to test that high of the October 15th low. So we got it on the 7 to 10s. If we look at the 3 to 7s, they're doing the same thing. They're coming in to test the bottoms, right? They're testing the bottoms. And that's because, you're getting the steeper yield, not the steeper, but you're getting the yield curve on the long end, right, driving much lower rates compared to the short end. And I wanted to do, where's the 1 to 3? Here's the 1 to 3, and it's the same thing. This one's also got a decent little spike going, from a perspective of where it's been. All across the yield curve, all across all types of bonds, corporate bonds. But this is, if I was worried about stocks, cratering, potentially, the ramifications of, stocks failing or companies failing and the bonds going bad, I wouldn't be buying corporate bonds. Now, this is the high end of that curve, but again, spiking higher. And then if I look at the junk bonds, this is where you would expect it to really start to sell off. Well, how are they selling off? Lower volume as they're coming back. Nobody believes this market's going to crash from the perspective of the bonds. Matter of fact, it looks like they're expecting it to probably turn around pretty soon. If I look at the dollar, right, the dollar has been just as much a culprit. It's actually what's pushing the oil as well. What does it do today? Had 24.31 yesterday, does 24.31 today, closes just underneath it. That's a test failure at the highs. That looks like it's going to try to reverse. And then if I go back over to the other currencies, the 2 or 3 major ones over here, FXE did fail, went lower. That one's going to be, and that's 50% of that index. But the FXY has been pushing higher. And I wanted to look at the pound. The pound has been getting pounded, did again today. That looks like a blow off as well. So if all those are culminating as I see them, I would expect equity markets going to get some sort of a bounce. I'll close on a couple other quick notes here. This morning, if you didn't see it, you might want to pop in here. I did a little piece this morning. Gold stocks starting to look interesting. Gold spiking up again. Now, gold still has a ways to go. It has to get over the swing point high. But if it can get over the swing point high and hold it, right, these metal stocks are going to get a nice pop. They're already getting a decent pop in a number of them, many of which I showed in that video this morning. And if I pop down to silver, you're seeing the same sort of action in silver. So, is gold going to have a good year finally? It's been, what, 3 years now? Matter of fact, it's been longer now. Let's pull silver over. Here's the silver chart. That spike high was back in April of 2011. It's been downhill all the way. We're talking about almost 4 years. So, are we near some sort of a buyable bottom in the markets? It's too early to know that in the precious metals, but certainly it's starting to look as if these guys may be trying to finally put in some sort of a bottom. Here is the way it looks on the weekly. Okay, so tomorrow, what do we got? Wednesday. Earnings are going to come out next week. ECB 2 weeks from now. You got employment numbers later this week. And you got Fed minutes tomorrow. That's the big news tomorrow. So, are they going to be able to do something? Oh, and if I go back to another piece of economic data, most of the economic data continues to come in a little bit lighter. That was part of the problem again today. These markets actually shot up this morning and then gave it all up and much more. That was on the back of PMI numbers, worse than expected, and I mean, there's still good growth here in the States, but lower than they were. And I think it was factory orders was the other ones that were down. Fed says it's going to raise rates sometime this year. Economic numbers not as appealing. Boy, that seems to have an impact on people, right? I mean, we're going to raise rates no matter what. The rest of the world's struggling with their PMIs, with their economics. I don't know, it doesn't quite fit right, does it? Well, is the Fed telling us that it's stronger than we think? Does the Fed really know? My opinion is, they have some good models, but, they're like everybody else. Every now and then you just got to pull a number out of the air somewhere. So, when you're trying to look like you know everything, you can't slip up. And right now, with oil cratering, people are starting to wonder, is there really inflation? Do we really need to raise rates? Will the Fed raise rates? Will they push the dollar even higher? I don't know, folks. That's I've been saying for a while they're not going to raise them, in the sense that maybe you get a quarter point or something, but I just can't see you raising rates unless the rest of the world starts to take off economically. It's it's almost like political suicide. I'm going to leave it at that. I'm expecting a bounce tomorrow. We'll see how it folds. Have a great one. Tell a friend, tell two. I'm LA. This is and it was your daily NeoTA wrap. Have a great. See you next time.